All right, guys, welcome back. Today, what I'm going to be doing today is breaking down what I consider to be the highlight for the week, some of the trades that we took the past week that was shared on the Discord channel and on the Telegram Signal channel. All right, so I'm going to be breaking the motive for these trades. So if you go to the Discord community, you will find this NZD longs to this particular area. And 2 days later, that was on Friday, we had more longs in any NZD US dollar. Okay, the question now is, why did you take that, or why did you trade that? And I just want to break that down. Now we are on the 15-minute, but I'm going to go to the 1 hour time frame, and we're going to start to break things down from here. So on the 1 hour time frame, as you can see, we had. I'm going to go ahead to bring this back. All right. So on the 1 hour time frame, we had motive moves in price, or we had price moving or rallying. But the question that you always want to ask yourself is, what is the origin? Okay, a terminus, an origin for every price move. It's very important that you're able to find an origin. So when you find an origin for every price move, then you can actually find where it's going to terminate at. Okay, and the case is vice versa for a bullish reaction and a bearish reaction. Where did that move start from, and where is it going? You can find a terminus where it would most likely end its rally, or where it could most likely end its decline in price. So as you can see, we had price trading lower, and it went back to rebalance at this particular area, traded back. Now, each time we find a rebalancing market, or we find price trying to rebalance in order to continue a decline or a rally, it would create interest or liquidity that will be checked later on. Now, trade it back in here. The very important thing is, I don't need to know where a particular trend will start from or should start from. Okay, I'm not going to bother myself with that. But if I can spot it, that's fine. So we saw this move starting from here. Okay, the rally started from here. I'm going to take this off. It started from here, and that was a demand area or an order block. Took out this highs, and you saw the rebalance, and our price had traded back in here. Now, upon trading back in here, we saw price trading higher, broke the highs. Now, this is on YouTube, so there are certain things I'm not going to talk about. Okay, price traded back in here to rebalance on the 1 hour time frame. Now we're seeing a little bit of a redistribution. Okay, redistribution in price coming back to rebalance at a bullish order block on the 30-minute time frame. That was the very first time. First of all, we already know that this is actually bullish. We'll look for an area where, okay, we're going to find more rebalancing in the marketplace, and that would really affect or determine what we're going to do. Now we're going to break this further and then look at the entries. Now this right here is that 30-minute order block or 30-minute demand zone. We can see the price reacted beautifully to it, and upon reacting beautifully to it, it began to trade higher. It began to form candles and some kind of accumulation or fractal accumulation on the lower time frame. So the only way to actually see that, okay, we're getting ready for a bullish move. First off, we've got a bearish order block here, or a bearish POI, and that was, for me, that was the target because we had seen a really good move, a really good move or a really good reaction to this demand or that order block. That was a really good move. I don't need to take an entry here. But when I see the reaction and noting the fact that we are already reacting to a higher time frame order block, and back coming here on the lower time frame, 30-minute, we can tell that, look, we're heading higher. We're heading for this levels, and we're going to go for this levels. Okay, this basically failed. Okay, this failed to be a bearish POI, but it was actually a target, so it wasn't much of a problem. So we're going to go to the 15-minute, break further, and then I'm going to come back and talk about Friday's trading. All right. So here, as you can see, if you look very well, you're going to find that this on the 15-minute was one full candle, and that was the reaction. Price stayed there for a couple more candles. It stayed on that level. And let's break it further down, because what we want to look for is a break of structure. We want to look for a break of structure and a return. But the thing is, if you look at this on the 15-minute time frame, you may not see the entry, because this was the jackpot, letting us know that, well, we've closed the imbalance and we've closed the market has rebalanced. And so trading here and giving us this type of reaction at a 15-minute or a 30-minute order block on the higher time frame, that was, the signal. That was the signal, and this was to be the target. And let's see how many pips that was for. That was for just around 40 pips, 39 to 40 pips, and roughly around that. And remember what I said. I believe that you can build your life around 40 to 60 pips every week. I believe that. Okay. Nowadays, we've got really good prop firms out there that you can actually take advantage of. And you could actually do a lot with 50 to 60 pips every week. Okay. 10 lots, 5 lots, as the case may be. Now, breaking this further to the 5-minute time frame. Now, 5-minute time frame, you get to see more detail. There are more details to this particular trade. Now, here is the reaction. Price trades higher. It breaks this structure high and returns. Now, you can actually use this as an order block, a bullish order block for longs. And price traded back in here, starting from this all the way here. But let's look at this. Now, if you look at this, this is a low right here. This reaction, the reaction that we're looking at is a low. Price trades higher. Now, this area becomes a mitigation zone. Price should trade back to the top of these candles for a mitigation. And it did. It did trade back in here. Now, maintained a particular high, maintained a range. Now, upon breaking this here, we could use this particular candle here as further entry, a further entry zone. I missed all of this, from the very beginning. One thing is coming in early and finding these opportunities early. And if you're not able to find them early enough, but you identify and then you know what you're looking for, you could actually go in with a manual order or a manual market execution. So this would have been the second entry. If you had missed this would have been the second entry, but we were looking for price to trade back in here. Okay, we were looking for price to trade back into this candle right here, because we had the break of structure, further break of structure, break of this structure high, the break of this structure high, and price. We were expecting a return to this area, but it failed. So what I did was to take in a manual entry at this area. You can actually go check this on the channel. And then what happened next, we saw price trade higher. It continued to break these structures, and that was it right there. We had a really crazy rally to the upside, and that was the trade for, I think that was Wednesday. That was Wednesday's trading, and this was shared on the Discord community and the Telegram Signal channel as well. So we were looking to take our targets here, or to take our profits at this particular area, because we were expecting a decline or a weakness. We weren't off by so much. As you can see, price just traded a little bit above that particular area. So the question is, where did it use as a reference for, its bearish POI? And that would have been here, just around here. So this zone was used right here as bearish POI. If you look just here. Now, if we break this further down, perhaps we would find a bearish order block, but that's not what we're here to look for. We're just here to look at the reasons why we took this trade. And following 2 days later, the following day we had a correction. Price, corrected. This is one very important, very good way to take advantage of the market, because when you see things like this, the market will retrace and go back. I was expecting a reaction here. It failed to give me that. It traded back in here. So we didn't trade this. So on Thursday, we didn't really have any solid opportunity, because we missed some of the opportunities, and price didn't trade into our limits for some of the other ones. But coming back to Friday, we had price trading back. Instead of this particular zone that I was looking for, it traded back in here. And I'm going to explain something. Okay, but I'm going to just drop it here. Price trades from swing high to swing low. There are certain things to look for. And so I wasn't surprised when I started to see this accumulation here, the Wyckoff accumulation happening at this particular area once again. So it wasn't really surprising. So as you can see, we had the SC and the ST, and we had the spring, the test right here. Now, I could talk about all of that. This right here was the reaction zone. The spring, or the ST and the spring, was a 15-minute order block or demand zone that got validated by this one move to the upside. Very fast move that broke the structure high. Okay, forget about the weeks. It broke this structure high right here and traded back lower. Now, I'm going to break this down. Like I said a few minutes ago, the most important thing is being able to identify this early enough, because if you're not able to do so, you might have to take a market execution. Now, if we break this down into the lower time frame, you're going to find that we had the same type of behavior right there that I talked about previously. A low and a lower low. Price trades higher, gives us an order block. Okay, and that becomes an area for a mitigation. Price trades back in there, and boom. But there's something that I talked about in one of the previous videos where, I showed you how to validate order blocks and how to validate zones, demand zones, and bullish order blocks, and how to know how these areas can be high probability, and how you can actually, manage your entries by lots and your risk. You could risk 20% on one of the entries, and then you can go, when you see a secondary reaction on that particular area on the lower time frame, you can go back and pick the remaining 80%. Okay, so I talked about that. If you haven't seen the video, it's going to pop up now. Now, here you can actually see that behavior. This is the 15-minute time frame. Now, let's just assume that, you took this. All right. Now, I want you to look at this here. This is the same as this, and it's happening on the same time frame. So that's not what we're talking about. But let's say you had an entry here and price traded higher, broke this high. I'm not sure about this, but I think it just a little bit. Okay, price trades higher. Now let's go to the 5-minute time frame. Okay, we're looking at this area. I'm going to mark it now so we know what we're looking for. This is how you can actually validate your entries. Okay, and you can use the full measure of lots that you want to use. Now, we're looking at this zone, okay? If you want to call this an order block, a build-up order block, okay? But let's go to the 5-minute time frame where we're looking for the price to print this same type of reaction on this particular zone. Now, this was that mark, and here, that's where it started. But I want you to come back and see the same behavior. Now, this is the same as, it's the same as this. It's the same as this. But we're paying attention to this one right here, this particular order block. We're paying attention to that. Now, if we go to the 5-minute time frame, you're going to find this. I'm going to zoom this now. Look at this. The same behavior right here, the same behavior right here. But the most important thing is it mirrors the same type of price action that we saw on the 15-minute time frame. And this validates our entry. First of all, you would have gotten in here, okay? After this, you'd have gotten in here maybe with 10% of the original 100% in terms of lot sizing and risk. Now, upon coming back on the 15-minute and breaking this further down into the 5-minute time frame, what do you see? You see the same behavior, price coming back in here, creating the same type of behavior that you found on the 15-minute time frame, creating the same type of price action, basically printing the same type of price action. And you can come in here and pick your entry, the remaining 90% or the remaining 80%, as the case may be. And what happens next? Boom. We were done with the accumulation. This was the very first test, and price came back in here. And that would have been the entry with, that would have been your entry with the remaining measure of lot size that you would be looking to trade with. And this was a target, right? And that was for, let's see. That was for 26 plus pips. Okay. Now, if you count that and the previous week, the previous day, 26 pips, and we had over 30 pips. And you fine tune your entries the same way that I've talked about it, the same way. I want you to go back and look at what I said a few minutes ago in the previous opportunity, 2 days prior to this one. If you can do this and every single week, 2-3 trades a week, you don't need more than that. You don't need 5, you don't need 100 pips. But I know sometimes it can be actually crazy. It can be crazy because we are in a particular period of time now in the market where we call the summer doldrums. And it's been crazy. It's been crazy, we've seen what I call on algorithmic price behavior, and it happens, crazy moves. So now when we're able to find things like this, it's a gold mine. In times like this, it's a gold mine. You can just 2 lots here, 8 lots here, that's a 10 lot. And that would have been, how many pips, what that would have been. So just here, boom, it traded higher. And that was it for the week for me. I want you to look at each layer of confirmation that I put in here, each layer of confirmation. And I'm doing this out here free on YouTube. You can take advantage of this. Put this layer of confirmation on every trade. Try to reduce your risk. If it's an order block, that doesn't mean it's going to work. There are other contexts that makes your order block or your demand zone high probability. And I just showed you a few of them. And that's the reason why you should always use the minimum risk on the very first zone until you find a secondary reaction on the lower time frame, particularly the same type of reaction on the lower time frame going forward. Okay, going forward, that would validate and make it high probability, not 100%, but high probability. And most times you can see this, giving you a really good juice out of the market. So that's what we did. Excuse me. That's what we did for the past week. And yeah, so we're going to be going forward and looking for more opportunities as we, approach a new week. So as you can see, we predicted this. I was expecting that we would see price returning into this zone. Okay, I was expecting that we would see price returning into the zone for, entries, but it didn't. But I had another pending order at this particular area, which didn't get triggered. So it was the very first area that got triggered here. So that's one way you can actually do this. But if you take advantage of things like this, break of structure, return, now this zone becomes your area of interest. You break that down into the lower time frame. You find price action that copies that same behavior. This would have been your first entry. The second entry would have been more, way more. And boom, you'd have been able to take advantage of the juice, the whole thing. It moved more than 29 pips. My target was, the target that I gave was this area, but I was able to capture from here all the way up over 40 plus pips. And that's basically, that was basically it for the week. So that's going to be it for today. If you really want to be a part of the Discord channel, you can find the link below, but you can actually reach out and we could fix you in. So that's going to be it for today. And I'll see you next week. And until then, have a good trading week.